Hi, my name is Khan and welcome to the new chapter. In this chapter, I'm going to teach you about that how we can use lower time frame entry. As I mentioned that how we can identify our trend direction and how we can easily spot our POI if market momentum is a bullish and bearish doesn't matter. Main thing you need to identify our trend direction and wait for an specific POI which is unmitigated is taken out the liquidity, and once price tap them then you need to switch in a lower time frame. Then we can trade in a lower time frame as we have follow the higher time frame. Like if you are using 1 hour as a higher time frame, then we can use 5 minute as a lower time frame. If you are using 15 minute as a higher time frame, then we can use 1 minute time frame, and also you can use 2 minute time frame. Let me remind you previous chapter as well as here, then you can understand that what happening in a current chapter here. Okay, in a previous chapter, as you know, the if market momentum is a bullish here, right? So if everything is a bullish here, simply what are you looking here? We are looking here for the buy after taking out the inducement, and then we can buy here. Okay, so this low act like an inducement because this low must be taken out. You don't need to buy here, and if price tap on it like here, okay, so once price tap here, you need to switch here in a lower time frame, and then we can expect some continuation move to the higher like this one. Again, what happened here? Market break this high and create new continuation pattern here, means you can say break of structure, or you can say market creating higher high is here. So after that, what are you looking here? Simply if price came back on this point right here, so what are you looking here? We can also take risk here for the buy, and again price going higher high and again take a pullback, and if price came back on this one, we can also take risk here for the buy. Okay, then again what happened here? Market trying to go higher like this one, and this is unmitigated here. Okay, so if you are thinking that you need to buy here, so you can take risk here for the buy. No, you don't need to take risk here for the buy, because below it you can see that one more unmitigated order flow is available here. Okay, so once price tap here like this one, and then we can expect some continuation to the higher. So now you can understand that if market momentum is a bullish and market taken out the liquidity which is here, and price came back to the upside and take a pullback, and then we can buy here. Again market create a new higher high and take a pullback to mitigate this zone, we can take risk here for the buy. Again price go higher, and if price came back this point, then we can take risk here for the buy. If no, then you need to wait for it to take out this low, mitigate this zone, and we can take a risk here for the buy. And same thing applicable in a bearish market. If market momentum is a bearish right here, okay, and then what happened? Market taken out this inducement and market went down like this one, break this low, and what happened here? We are looking here for the sell because this zone grab the liquidity, so this zone, entire zone act like a high probability PY for the sell. Again what happened here? Market take a pullback and push downside. If market can make a pullback to the upside, mitigate this zone, we can expect a sell side move right here without any inducement right here. Again take a pullback, again go higher to mitigate this pullback here, we can again sell at this point, take another move to the downside. So this is a very simple process to identify our trend direction and identify our PY. And once price take a pullback to mitigate your order flow, to mitigate your order block, then how you can deal in that situation in a lower time frame. So in this chapter I will teach you everything step by step. So let's back on the chart, then we can understand very easily. Okay, so this is our Kiwi USD chart which was using in a previous chapter. So right now you can see here the market momentum is a bullish, as I explained in a previous chapter as well as. So right now what are you looking here? Simply if market momentum is a bullish and creating higher high, it means the market momentum structure is a bullish, and simply you need to wait for taking out the inducement and wait for pullback mitigation, then we can buy in a lower time frame. So right now what happening here? This is our internal like here, and this low is taken out the liquidity. So if market sweep this liquidity right, and then we can expect a continuation move to the higher. This move is looks like this one, and sweep this one and pushed higher, because this low is already grab here, break the structure, and if price close over it, then take a pullback, and then we can plan here for the buy to the upside like this. Okay, so overall market momentum showing bullish, and if market take a pullback, then we can think about it buy here. So let's wait for some continuation move and wait for some pullback, then we can think about buy here. Okay, and how you can buy here in a lower time frame, I will teach you everything. Okay, so now you can see here market take a pullback at this point right here. Once price take a pullback at this point and mitigation, Now you need to switch here in a lower time frame. If you are following 1 minute and 2 minute, you can use any time frame, right? You need to use 1 minute time frame. If you have access to 2 minute, then you can also use 2 minute time frame. But I'm going to show you 1 minute time frame because majority of the traders trade in a 1 minute time frame right here. Okay. So this is our mitigation here, which is our 15-minute higher time frame order flow is here, right? So now you can see here in this case, this is our entire order flow is here. So this order flow is already mitigate here in a higher time frame. Now you need to refine here in a lower time frame. Like this is our 15-minute order flow. Now you need to switch here in a lower time frame, in a 1 minute time frame, whereas our unmitigated order flow is taken out the liquidity. So in this case, you need to start from bottom of the move if market momentum is a bullish. So this is our last selling move before the buy is here. Market break this one, take a pullback, and this one is already mitigated here. Again, market continue going higher high and mitigate everything is here. So this one is our last unmitigated order flow is here, which is already mitigated by this one right here. Okay. So break this one, take a pullback and go higher. So if all order flow is mitigated here, so in this case, how you can deal in that situation? Simply, you need to focus on the structure. What happening if price tap on your order flow right here. So once price mitigate this zone right here, and this is our last, and this is our higher time frame order flow is here like this one, right? So this is our higher time frame order flow. Price tap here and create here any reversal indication in a lower time frame, then we can think about it buy here. Okay. So how you can buy in a lower time frame? If price push downside like this one and break this one, take a inducement, and then we can think about it buy here, take another pullback, we can again buy here and till this high right here. Okay. So simply we can buy here something like this. This low is a broken, this is a chalk, inducement, mitigation order flow, and again break the structure and mitigate this zone here, we can again buy here at this point. So this is a possible scenario when price tap on higher time frame PY, and then you can trade here in a lower time frame like this. And this rule only applicable if market close below it in a lower time frame, right? If price sweep this low right here, like break this low, and this move is a sweep here, then directly break this one, take a pullback, and you can buy here without any inducement right here. Okay. So let's see what happened next after this one, and when we can expect where is our next buy possibility is here. Okay. So market just trying to push upside right here. Okay. So at this point you can see here this low is a broken here. So if market break the previous low and create any chalk here, you can understand like this one, this is a structure shifting or chalk here, right? Because market momentum was bullish in a lower time frame and tap here in a higher time frame PY, and now again market showing some reversal to the upside. As I recently explained that if market sweep the previous low is here right here and break the previous high and take a pullback, we can plan here for the buy to the upside like this. Why? Because there is no inducement needed, because the market not close below it, just sweep the liquidity. So if price sweep the liquidity, in that case you don't need to wait for inducement before the buy or sell right here. Okay. So in this case, when we can take risk here for the buy, look at this one. This is our entire zone is here right here. This is our last selling move before the buy at this point right here. Okay. Because this is our last selling move before the buy and market went up and then market pushed downside, and this move is our chalk here. You can also say market structure shifting here. After change of character, press push downside, and also if you would like to take one more additional confirmation, you can take candlestick confirmation like price type here, give any like bullish confirmation, bullish candlestick confirmation, then we can take trade here for the better confirmation. Okay. So let's see what happened next here after this one, price type here, and if you want to take risk here for the buy, definitely you can enter here and put the stop loss just below it, right? And target, at least you should take target here, which is almost a 2 hour here. And if you would like to take a target here based on Fibonacci tool, you can also set here. This one is a Fibonacci tool here. Put the high and put this low right here, top to bottom. And where is target? 1.618 is our maximum target is here. But I will suggest you take target 2 hour to 5 hour. Between 2 hour to 5 hour is enough. You don't need to put your target like 10 hour, 8 hour, 15 hour, 20 hour. No. You need to set a very reliable and realistic target like 2 hour, 3 hour, 4 hour and 5 hour maximum. So this is our target right here. Okay. And after that, what are you looking right now here? if price came back to the upside and break this one, you can set our target, okay, and also you can lock some profit. It depends on you, right? So let's see what happened next day after this one. Okay, price went down and give a candlestick confirmation here. If you are not interested here for the buy directly, so you can take risk here. Once price create a bullish candlestick confirmation here and put this stop loss just below it, and this is our target right here. Okay, the previous recent high is our actual target is here. And why we are interested here for the buy? Because as you know, this is our higher time frame PY. Price step here, give a small reaction to the upside, and we can take risk here for the buy. Okay, so let's see what happened next here after this one. Okay, price went up like this one. Okay, so now you can see here price went up here. The previous high is broken here. So in this case, how you can deal one more position is here. Like previous high is broken and close over it. If price take a pullback at this point, we can also take entry here for the buy. Reason is very simple, because this one is already grabbed the liquidity and market trying to go higher. So you need to put the stop loss just below it, and where is target are similar at this point right here. Okay, the previous target is the previous high is here. Okay, so let's see what happened next here after this one. All right, let's see. Okay, so at this point, as you can see here, market reached at this point right here, which is almost 3 RS here. Okay, and this trade is not activated right here. If you are thinking this trade is still valid for the buy or not, ask yourself. Yes, of course this one is a valid here. Why? Reason is a very simple. The previous high is a broken, means the structure main high is a broken, and again if market break the previous high, then we need a confirmation in a lower time frame to take out the inducement. So right now, if you are willing to buy here, okay, so this is a valid buy or not, ask yourself. No, of course no. Why? Because just below it, this one is also unmitigated zone is here. If this one is already mitigated here and then market went up, so we can take risk here for the buy at this point like this. Okay, so if price not create something like this, then we need to wait for it to take out the inducement, then we can think about it buy at this point right here. Okay, so this is our last selling move before the buy is here. So once price step here, and then we can take risk here for the buy at this point right here. Okay, so let's see what happened next after this one. And where is our inducement? Inducement this low, because this low act like a inducement. Okay, so let's see what happened next after this one, and market trying to go higher right here. So price step on the lower time frame PY is here. So once price step here, then how you can deal in that situation? Simply, if price step here, give correction like this one, break this structure here and create any pullback here, then we can think about it buy here right here. Okay, so right now there is no clear opportunity for the buy. You need to wait for it, but this entry is a mitigate here at this point, and put the stop loss just below it. This is our safer stop loss right here. Okay, so price trying to go higher, and then what happening here, let's see. Okay, so finally what happened here at this point, this low is a grab the liquidity, mean the structure is a bullish here and taken out the liquidity, and this is our last selling move before the buy is here. Look at this one, the last selling move before the buy is here. It means this low is already grabbed the liquidity, and in future if price came back this point, and we can buy here, right? So this zone become our next PY at this point right here. And if you would like to buy directly at this point, because this is a closing and the next candle is open here, we can take also risk here for the buy. And also for the like refinement purpose, you can take this low as a PY is here for the buy, and this low as a target, and this low is our stop loss. And where is target? You can set the previous high as well as here, right? So let's see what happened next after this one, and what are you looking here. Okay, so in this case, as you can see here, once price taken out the liquidity and went up and take a pullback, and market went high. Okay, again market pushed downside and mitigate your zone, which was tap here right here. Okay, so once price mitigate here, you can take risk here for the buy and put the stop loss just below it, and market start pushing higher high. At this point, market went around more than 1 RR. So in this case, simply you need to put the stop loss on a break even, and then what happened, market pushed downside and this trade closed on your break even point, and market then went higher. Okay, so it's all about probability. You need to think about it. You can see here 3 trade are taken out, 1 trade take profit hit, and second one is also take profit hit, and third one is our break even point is here, right? So let me remind you one more thing is here. if you are looking for the buy or sell any point in a lower time frame and a higher time frame, then always calculate your risk before the buy or sell. This is a very important, and don't think about it very big RR. Always when you take a 2 hour 3 hour, which is very enough to become a profitable trader, it doesn't mean that you need to like 20 hour 30 hour. No, you need to focus and consistency 2 hour and 3 hour, which is very enough. Now again switch here in a 15-minute time frame to check again where is our next POE and what are you looking right now here. Okay, so this is our next Y is here. Again, if market continue going higher high and market creating like a structure like this one, again market take the liquidity is here. It means the liquidity is already taken out, and then market went up and break this one. It means the price break this one and close of it and take a pullback, and we can buy here. Because of this move, market momentum is bullish. This low is a grab the liquidity, market go higher, close of it and take a pullback. And if price take a pullback and mitigate this zone, we can take a risk here for the buy again. So price coming back a downside here, and now you need to switch here again in a 1 minute time frame. Okay, then we can think about it, where is market going on right here. Okay, so this is our the price close of it, market went down, and now you need to identify where is our unmitigated order flow is here. Look at this one, every order flow is mitigated here. The last selling move before the buy is here, which is broken and mitigated. This one is already broken and mitigated. This one is already unmitigated order flow is here. It means if price came back at this point and give any bullish confirmation, we can think about it buy here. And this is a higher time frame, and this is a higher time frame to lower time frame refinement, because the higher time frame zone is here. This is our last selling move before the buy entire zone is here, and this is our refinement in a lower time frame, because this low is already grabbed the liquidity, and also this is an unmitigated zone is right here. Okay, so this zone grab the liquidity right here. So once price mitigate this zone, then we can take risk here for the buy at this point. So price type here. Okay, so if you wish to buy here directly, you can take risk here for the buy, but I will suggest you always you can take a lower time frame confirmation before the buy or sell. Like this is our entire zone is here. This is a refinement zone here. If you would like to buy here at this point directly, so where is stop loss? Just below. This is a very large stop loss. If you would like to take entry here, you can take risk here for the buy, and this is our stop loss, and this is our target, and you need to set our target at least 2 hour, which is around at this point right here. Okay, I will show you everything, like if you would like to direct entry, if you would like to like lower time frame confirmation, everything you can trade here. Okay, so this is our first entry here, and let's see what happened next here after this one. Okay, price pushing downside, and then what happened here at this point. Look at this structure here. This low is a broken, and this high is a broken. It means the structure is a shift here, bearish to bullish here. Okay, and this zone already grabbed the liquidity. It means if price already grabbed the higher time frame liquidity and came back this point, at this point the last selling move before the buy is here. Okay, so if price came back this point right here, and you can take risk here for the buy, but you need to put the stop loss just below it, right? And if you are thinking that why we are not taking here inducement right here, market must be taken out the inducement before the buy because price closed below it. Of course, market must be taken out the inducement before the buy here, but look at the left side is here. Market already grabbed the liquidity is here. So if price already grabbed the liquidity, we can take risk here for the buy, but you need to put the stop loss just below it, not here. Okay, I hope you clear. Like if price not taken out the liquidity is here, okay, and also taken out the liquidity in a both scenario, if market take a pullback like this one and came back downside, you can take risk here for the buy, but you need to put the stop loss just below it. In that case, your risk reward will be increased right here. Okay, because you are taking entry after taking out the inducement, and both entry are valid here. Okay, so let's see what happened next here after this one. Price take a pullback and continue going higher high like this one, and market take a small correction at this point. Okay, and finally what happened? Market going higher high right here. The previous high is a broken here, which is almost at this point right here. Okay, so this is our next entry, which was around almost 2 hour here, and this one is also roughly 2 hour here, 1.67 here, and this is 1.7 RR. Okay, so price creating a higher time frame structure, higher time frame PY, and simply you need to switch here in a lower time frame. You need to wait for it to lower time frame price execution, then we can enter here for the buy and sell. Okay, So I hope this will clear for you. Let me explain in a lower time. Let's work into 15-minute time frame to see exactly what happening at this point right here. Okay, so price trying to go higher again, and finally market hit our take profit is here, which is our 2-hour almost stayed here at this point. Look at this one. This is a small pullback and again continue going higher high, and this is our take profit hit at this point right here. So this is a very simple way. Maybe you can get some complexity at this point, but you need to understand where is our higher time frame structure. Simply you need to identify higher time frame structure, higher time frame PY, and switch into lower time frame. Find the lower time frame PY is taken out the liquidity. If price taken out the liquidity, then you need to wait for it, and then price mitigate here. You can directly entry. Also, if you would like to take additional confirmation, then you can take a risk entry after chalk and then wait for pullback, and then you can buy here, but put the stop loss just below it. So I hope everything is clear till now, and I'm very sure this will help you a lot while price is a bullish and bearish and market not taken out the investment. Just create a pullback and mitigation, and then we can buy in a higher time frame to lower time frame. Now you can see here market continue going higher high, and this rule applicable when market momentum is a bullish and take a pullback, and this is a will be continuation to the upside. Let me show you a few more example in a bearish market, because these are all bullish market is here. Like breakout, like means that taken out the pullback, and you can again buy here. This liquidity is already grab here. Breakout, take a pullback, you can also buy here in lower time frame. Again continuation move to the higher. Same thing, this low is taken out the liquidity, take a pullback. At this point you can buy here. You need to backtest on your chart yourself before the apply on live account. And same thing you need to see in a lower time frame, in a bearish market, in a higher time frame to lower time frame, everything. Okay, so let me show you a few more example at this point. Look at this one. This is happening here. This is our bearish market is here. So if market is a momentum is a bearish, simply if market momentum is a bearish and taken out this high and market went down, so simply this zone act like a high probability for the sell. Again take a pullback, this zone again become high probability for the sell. Again you need to sell here, no, because just above it you can see this is unmitigated zone. So that's why this low, this high act like an inducement. Once price tap here, then you need to sell here. You don't need to sell at this point, because just above it one more unmitigated order flow. That's why if there is already mitigated by this one, then you can sell at this point like this one. Okay, so I hope you understand what I'm trying to explain here. This is a very simple way. If market momentum is a bullish or bearish, doesn't matter. Main thing, when market taken out the liquidity, then you can think about it, buy or sell. Okay, so look at this one. This is a recent example here. The market, this is our news move. Okay, due to some fundamental, this move went up, and after that what are you looking here? Simply we are looking for some continuation to the upside maybe, right? Because structure is a change here. Before this move market was bearish and now turned into bullish, and we are looking for the buy after taking out this low, right? So once price taken out this low, we can think about it buy. But problem is here, if price taken out this low, where is our unmitigated order flow when we can take risk for the buy? So in that case, simply you need to do one thing is here. If market sweep this low, we can take a risk. If no, then market structure is a change again, right? So in this case, you can see here, before this move, market push like this one, small pullback, again go higher. This highs are taken out, means the liquidity is a grab here, push downside. This entire zone act like a PY, break this one is also PY. So you can sell here, sell here, sell here till this low, right? So this is a very simple way. When price taken out the liquidity and price mitigate those points, then we can think about it, sell here. Okay, so I hope this will help you a lot while you are trading in a higher time frame to lower time frame, in a bullish market, in a bearish market, everywhere. Okay, let me show you few more example at this point and at this point and at this point, right? Because this zone is a grab the liquidity, push downside, mitigate this one, then you can sell, break this one, take a pullback, then again sell here. So I will show you exactly what happening here in a 1 minute time frame at this point. Okay, so this is our lower time frame structure here. You can see here, this one is our first move is here, this taken out the liquidity in a higher time frame. This is a higher time frame, liquidity is taken out, and after that what are you looking here? Simply we are looking here for the sell. You need to identify there is any unmitigated order flow is available or not. Okay, so let's start from the top of the move to bottom of the move. You need to find where is our unmitigated order flow is here. This one is mitigated by this pullback is here, right? Break this one, take a pullback and mitigate. And price must be mitigated by a valid pullback right here. Okay, so again this is our last buying momentum before the sell is here, mitigation, and market went down. Again this is our last buying momentum before the sell, this one is already mitigated here. So it means everything is mitigated here, there is no unmitigated order flow is here in this lag. So if everything is mitigated here, so how you can deal in that situation, because market already taken out the inducement. Simply if market taken out the inducement, you need to wait for lower time frame structure here. So if a structure is a swing like bullish here, okay, and after that this high is a broken, this high is a broken, and finally market take a pullback, break this low and taken out the inducement, and then we can plan here for the sell at this point right here. But if this one is a sweep here, okay, so if market sweep the structure like this one, market went down and take a pullback at this point, we can risk here for the sell at this point. But you can take at this point a lower time frame candlestick confirmation, because we are already in a lower time frame, then we need a lower time frame confirmation candlestick. You can say like single candle order block as well as here. So let's see what happened next here at this point. This is a higher time frame inducement taken out, and after taking out the higher time frame inducement, price going higher high, and now you need to wait for some bearish confirmation is here. So how you can identify that market momentum is a change? Look at the structure here. This is our structure, something like this. Market just trying to go higher but not able to go higher. This is the last structure, means the candle close of it. So if price close of it, so you need a wait for inducement, and this is a structure something like this. And then what happened? This one is a fail to create new high and market went down. This one is a structure, means showing bearish, and you need to wait for it taken out this one, and then we can think about it by sell here, okay, because higher time frame inducement already taken out, right? So let's see what happened next after this one, and this low is our chop, and this high act like a inducement right here. So once price taken out this one, then we can think about it sell at this point right here. Okay, so let's see what happened next after this one. Okay, so price just creating lower lows at this point, market not like taking out this inducement. So how you can deal? Simply you need to wait for one more inducement, then we can sell here. Okay, so let's see what happened next after this one. And right now, where is our next unmitigated order block, and order flow is here. So price just creating a downside move right here, and market not taking out this inducement. And now what are you looking here? Simply we are looking for the taken out the inducement and mitigate something unmitigated order flow is here, then we can think about it to sell here, because overall market direction is a bearish here. If market like taken out this inducement right here and market went down, so this is a beautiful sell setup at this point right here. Okay, and this become high probability sell setup at this point. Okay, again what are you looking here? Simply you can see here, this is our one more structure here, this is a small pullback is here, again market push downside, and if market mitigate something here, then we can think about it sell at this point right here. Okay, so where is inducement? Right now the inducement is here, because this one is a valid pullback at this point. And where is our unmitigated order flow is here? The first one is here like this one, because just of it you can see here every order flow is already mitigated here. So once price taken out this one, mitigate this one, then we can think about it sell at this point. Let's see what happened next here after this one. Okay, market just pushed downside, and market finally hit our this unmitigated order flow is here. So simply you can take a risk here for the sell and put the stop loss just of it. You can put the stop loss just of it, and this is our entry criteria. And where is target? Target, the previous low is our here. This low act like a target is here, right? And you will get a 3R is here. Okay, so let's see what happened next after this one. Market push downside, and finally market hit our target is here. So this trade hit our take profit is here. As you know, the same thing we have done, like higher time frame inducement taken out, and lower time frame structure shifting, taken out the inducement, mitigate higher time frame, means lower time frame order flow is here, and taking an entry here, and this main low is our target. Now again switch back here in a 15-minute time frame to see exactly what happened in the next trade is here. This is our next trade is here. This is entire zone as an order flow is here. Once price mitigate this one, and then we can take risk here for the sell, right? So this is a zone when price give reaction and then sell, because this is an entire zone as an order flow, right? So you need to switch here in a lower time frame again to see exactly where is market going on and how we can trade here in a lower time frame. Look at this structure here. Okay, so at this point you can see here everything is a bullish here in a 1 minute time frame. There is no bearish indication here. At this point you can see some like market break this low, but market not create here any like inducement, because this is a structure like this one and push downside, and if market take a pullback and market went down, so we can think about it here for this sell. But market just creating higher high at this point, and finally market at this point, market trying to push downside right here. So when we can expect, this is the last high is a broken, this one is a chalk, and after chalk, what are you looking here? You need to wait for inducement. This is an inducement, but price not taken out this inducement, and market just create this one is here, again push downside. So when we can expect next so in this case, when we can expect next a possible sell scenario is here. Okay, so this is a structure shift here, right here, and this one is a called a chalk here, and again we need a wait for inducement before the sell here. Chalk, inducement, no inducement taken out, market went down, and what are you looking here? Simply you can see the market taken out this inducement, and after taking out the inducement, what are you looking here? This is our last buying move before the sell right here. Okay, so we can sell at this point right here. Okay, where is stop loss? Stop loss you should above it. Okay, and where is target? Target the previous low as a main low as a target right here. Okay, so this is our target, which is around 2 hour is here. Okay, in this trade you will get a 3 hour, in this trade you will get a 2 hour. You can see how price is reacting in a higher time frame to lower time frame, and this is applicable in all time frame, everywhere, any market, everything. So I hope you will learn a lot of things, that how things actually working in a higher time frame to lower time frame, and whereas market is a bullish and whereas it doesn't matter. Main thing, you need to identify our trend direction, and once price market taken out the inducement and then market went down, so this zone become our high probability, take a pullback, and this zone become our high probability, switch in a lower time frame and sell. If you did anything wrong is here, then you can also take entry here, but put the stop loss just of it, and very sure that you will get a very good trade here. Okay, maybe you get some small risk reward, but you will get a winning trade is here, because you are enter once price, you are entering on that point which taken out the liquidity, right? If you did not understand anything, any topic, simply you need to watch this video multiple times. I am very sure this will help you a lot. And if you, so thank you so much everyone watching the entire chapter, and see you on our next chapter. Happy trading.